Yeah, I don't want to spend too much time. EDD, unemployment. Okay, unemployment. It is your income, subject to income tax. My page 101, child support compared to alimony. I just mentioned that. That's on your phone number phone 1040. That is on 11. That's alimony. Okay, alimony. I just mentioned that. For those people, they are divorced. So as per the either judgment or their settlement agreement, one party pay to the other party between spouse. So if the payment is between the spouse is income, it is income. And for those parties pay out, they can deduct. However, if this money is paid for as child support, so that's big thing. So when people divorce, even though there's money compensation, they would like to configure it as a child support. But depends how do they negotiate. So the reason why they want to configure it as child support because the receiving party doesn't report as income. However, the paying party cannot deduct. So it really depends how can they reach the agreement. So same money, same amount of money transfer. If you under the agreement say this is alimony, the paying party can deduct it. Receiving party must report as income. But same money transfer as a child support, receiving party does not report as income. So that's big thing, okay. But the key word is never get divorced. You can save the trouble. Oh, one or two. Big issue right now. Big issue. I may have a video program probably recently talk about this issue. This is a big issue. That is called discharge of debt. Some people say this is a forgiven debt. Some people say this is a cancelled debt. What happened? A lot of people right now on the market, they owe the money to the bank as mortgage. They owe the debt to the credit card company. And some of them are my client. I say I can defend you. And hopefully the bank will say forget it. Whatever you owe to us, we just write it off. We don't even file the lawsuit. We just say we are in the bailout. We write off. And I would say 80% of the chance the bank will write it off. Okay, I don't mean encourage you to not pay, okay. But usually in this situation, bank will write it off. That really means they just forgive the debt. So say for example, this person owe $10,000 credit card debt and just cannot pay back. And after a few months collection, the bank say, okay, forget it. Too much hassle. We just write it off. Okay? So this person just solved one problem only. What is the other problem?
Pay tax.
Yes, this $10,000, eventually this $10,000 is not in his or her pocket already. It's long gone already, okay? However, our big brother say, hey, little brother, this $10,000 is your income. You say, what? I don't have anything. But by law, that is your income. Okay, remember, okay, this is a big issue right now. I'm going to talk about, probably I'm going to talk about this on the video talk show, probably.
Regarding the foreclosure and short sale, the same thing?
Yes. But the topic, again, remember that when we learn taxation, we learn general rule, right? Right now the general rule is forgiven, cancel debt is income. This is general rule. If I can go there, okay, we'll talk about it. If I go to the radio show, I will talk about what is exemption. Of course, we learn exemption, right? We learn exception. The general rule is too easy. I'm gonna talk about if under this situation, how can people not pay tax? That is true. What are you talking about? I have $10,000 income. They're long gone already. That's a few years ago. How can you expect me to pay, say, $10,000? Probably is $2,000 tax. Probably, maybe more. I cannot even pay credit card. How can you expect me to pay tax, right? So exception is there's a rule. There are rules to cover the situation like this. Even though you have canceled debt, you are qualified as exemption. you don't pay tax. No tax.
So like credit card debt, you can cancel. How about the tax? If that guy is so poor, he can never
Okay, that's another issue. Yeah, his question is, how about I owe I owe money to my big brother. Gosh, you don't owe money to the bank. You owe money to your big brother. Oh, I've done a lot of that. I have done a lot of that. I just mentioned that story 2 weeks ago, right? I have one of my clients owe 30,000 tax to IRS, and very bad situation. And I brought her to IRS. We just talked to the IRS officer. We say, we don't deny, okay? We admit, and we are a good person. We are very good citizen. The thing is, we don't have money. we are good, but we don't have money. And also, my client lose her house already, and even lose her job. And right now, her job is temporary. Okay, we just state everything in front of the IRS officer, and 6 months later, $30,000 reduced to $3,000. Reduced, and that lady is so happy and borrowed money from her relative, pay off everything. So to your questions, if those people really owe big money to IRS, but never do that, okay. Hopefully we never do that. But in case they happen to you, we have a way. Because.
So why people can owe that much of money?
Oh, that lady sold the property a few years ago, and there was capital gain at that moment, and that lady just did not report it. A few years ago.
So she got audited?
Yes. For any reason, well, I believe IRS know everything. Okay. IRS, I believe they know everything. The thing is, they would like to go after you or not. It's their choice. This is their mercy. Okay. Anyway, okay, let's go to exclusion. Page 103. Exclusion means exception to IRC section 61. Okay, remember I said, whatever we receive is supposed to be our income, but the main thing is we need to learn what is exclusion, right? We learn exception. Number 1, gift and inheritance. Gift. So for those of you receive a gift from somebody else, whatever you receive is tax-free. But we talked about this issue 2 weeks ago, right? Not everything could be qualified as gift. Okay, here's definition on my page 103. Okay, let me read it to you. Okay, you cannot qualify everything as gift. Okay, there is a definition here. Okay, a gift, number 1, is a voluntary transfer. Voluntary transfer. So if you work for your company and your company pays you something, that is not voluntary because you work something. There's condition. If you don't work for your company will not pay you, right? So number 1 issue is voluntary. That means the other party doesn't owe you anything, or you does not owe anything to the other party. Voluntary. From one party to another without full or adequate consideration in return. So go back to my example. This international student rent a room from landlord, say $500 per month. Okay? And then this student say, I will take care of your boy or girl after school, same thing, $500, and they trade off. So that is not gift. Right? They have something in return. Okay? So what's gift? If this student live in the house, $500, and don't do anything in return, the landlord just say, you just stay here for free. Stay here for free. So there's gift. There's gift. But be careful, okay? Be careful. Gift is income tax free. But gift could be subject to gift tax. And gift tax is payable by the giver. Whoever give out something, be careful, you may be subject to gift tax.
So how about you have a relative, from somewhere come to stay with you and you just give it for free and that?
I think it's okay because IRC provided 12,000, 13,000 per year exemption, so you don't need to worry about all of your relatives come to your home and say, I need to charge you. Otherwise, gift, I need to pay gift tax. No, it's not that way. Because every year you have 13,000, for each one person is totally give tax free, so don't worry about it. Don't be too mean, okay? After you take this course, everybody becomes so mean, okay? Any questions? Okay, so gift, inheritance, it is not income. Same thing, okay? In life insurance.
How many percentage of the gift?
Oh, you need to check the IRS website. I need to check, but I know if your gift exceed 1 million still is current exemption whole life. If you exceed that number, my understanding is like 45%, 55%, almost half. So that means if you already accumulate more than $1 million, you still give out, okay? Then each dollar you give out, you need to pay like 50 cents to IRS, to our big brother. We all say, wow, you're so rich, you're so nice to somebody else, how about to me? Right? So always keep it in your mind, in your whole life. Oh, by the way, big issue, okay? Relate here. If you donate, give, right? Give is donate, right? If you donate your money to non-profit, we need to specify 501c3. Okay, 501c3. If you donate the money to any entity, okay, individual cannot be a 501, okay. Individual, okay, cannot be qualified as a 501. Only the entity, okay, they are the non-profit organization. Not only that, they are approved by IRS, qualified as, they have a tax ID, qualified, approved by IRS as a 501c3 organization, okay. You donate the money to them, not only exempt from gift tax, but also whatsoever you donate out, you can deduct portion of them as from your income tax. So double benefit. So IRS or IRC encourage people to donate something to do the good thing. So if you want to donate something, making sure the party received money from you, they are really qualified. They have to prove it because they have a tax ID. You can ask, where is the tax ID? It's a piece of paper, letter from IRS. So if they are qualified as a 501c3, your donation, you have two benefits. Number one, of course, this is not gift, so you don't need to worry about the gift tax issue. Not only that, on the top, you can deduct portion of your donation from your income.
What
So
do you mean portion, not all?
depends on your AGI. This is very complicated. Depends on your AGI, because this is calculated from your AGI. That may be one of our topics for you to find out. But anyway, so this one, yes, go ahead.
How about if I donate to overseas?
Yeah, that's another issue. You know, okay, IRS would like to protect the interest of U.S. government. Makes sense, right? So, Internal Revenue Agent, of course, their main job is to collect the money to support federal government, right, U.S. government. So this 501c3 must be the corporation registered in the United States. Doesn't matter which state, you must register in the United States. So even like the Red Cross is international, but you must donate to the Red Cross under this United States entity. Maybe there's another Red Cross in China. If you donate the money to that Red Cross, you cannot deduct money as a deduction. But they make sense. Even you donate the same amount, IRS hope you'll donate to the entity registered in the United States. So if there is any non-profit organization in China, if they want to receive the donation from USA, you or I will suggest them register the same thing. It's not a hassle. Just register in the United States and then qualify as a 501c3. Yes?
Is this going to be one of the topics for presentation? Non-profit?
Not right now. No. Maybe I will consider it. So you cannot adopt it. Sorry about that. Too quick. I will reserve that for you anyway.
Very sweet.
Oh, 106, another exclusion, scholarship. Scholarship. So if student receive scholarship from school, and that value is tax-free, of course. That value, otherwise most of you will pay tax. Okay, so lucky. But there's a qualification. Okay, number one, your recipient is candidate for degree, so you are qualified for degree. All right. Number two, the amount received is not paying for services. Okay, it's because not paying because you are assistant here. You don't do anything. You just come here as a student. If you come here as a TA at school page or something, that is taxable. But the scholarship is just for your study. Number three, pay for the tuition. By the way, we don't have a break, okay? Because we only have 2 hours, so we're gonna catch up everything. So no break.